Good morning. Today is August 19th, 2019, approximately 8 a.m. Eastern Standard Time. My name is Olawale Okebola with Spartacus Trading Corporation, where serious advanced traders come to train and learn. Here to bring you the pre-market report for the S&P E-mini futures contract. Start off with the monthly bar. Right now on a monthly, we're one time framing lower on the monthly for the month of August. Just 1 month. Not much to talk about going on in here. On the weekly, we are, well, this morning we are gapping, and I'll show you that later. So it's safe to say on the weekly, we are one time framing higher, 2 weeks. Here's the first week because this low from last week did not take out last week's low, and we did breach the prior week. I apologize. We did breach the prior week's high. And so this morning we are opening it up higher. So it's safe to say that we are one time framing higher. What is it, 20? So right now the market, pre-market's trading right around this level here. So it's safe to say that we will be one time framing higher at least for now, 2 weeks. And let's go to the daily. If we're trading around 20, we are gapping from last Friday. We're gapping higher. Okay, so that means we're one time framing 1 2 days up. So what do we got? Basically, we got a bit of a divergence in the market. Although on the longest time frame on the monthly, the trend is still down. Keep that in mind. This is a time frame longer than the day time frame. Majority of you guys are day traders. You got to keep the longer time frame in mind. However, the divergence occurs in the weekly. We're trending up on the weekly. We're trending up on the daily. Nothing to get hot and heavy saying that we got a reversal coming on this sell off from the monthly, but it's just something to pay attention to. We want to be cautious. Now to the profiles. As you can see, this in blue is the pre-market, overnight, and also pre-market where price is trading. We are gapping from Friday. Here's Friday's high. Here's our gap right here at this line. We got the gap fill. We want to be cautious going into today. We play in the gap rules, go with all gaps that are not filled relatively quickly. The gap is filled. This is the gap, and value cannot be at least unchanged. And we probably will have a odds favor another rally to the upside. Today is going to be very tricky, and you want to be cautious before you decide to place a trade because of how far we're gapping. Um, It's 8, so I don't know where the market's going to shake out. I don't know if we're going to get a sell off, but let's just say if the market opens from here, you're talking about a 16-point gap. You want to let this market settle down. Probably, I would strongly recommend for the first 30 minutes, let the emotions let the emotions calm down because what happens is there are some stops placed above Friday's high. Those stops obviously has been elected. So when people come into the market, there's going to be a lot of scrambling. With that said, more than likely it would probably be hard to fill the gap, but that doesn't mean we can't fill the gap if there's some sellers waiting to sell this market. So you don't want to get caught in between the emotions in the morning. So you want to just chill out, take a break for the first 30 minutes, just observe how the market is trading, and then from there you can, if your bias is higher, you want to find a way to get on with one time framing. You want one time framing to continue to take this market up. Or likewise, if you're looking to fade this market, be careful because value will be against you. Value will be clearly higher. So if you're in a short, you want this market to one time frame lower, show some elongation. You want this market to show that it wants to fill this gap with some authority. That's what you want to pay attention to on a short. Um, Also, we are trading back within this range from I think it's the 13th. Okay, overnight, you see all these single prints. It's nothing. There's no volume, so it's nothing for overnight to trade through it. And that's the case. We want to pay attention now. If you're long, you want to pay attention. How does the market behave in and around this area where we're about, well, let's just start from here. Sorry. I just expanded the profile. So this was the last balance area before the market sold off or gap lower, whatever happened on that day, the day following this day, which is the 13th. So I am going to draw a zone right here. Because the market is already up, I don't know where we're going to open once again, but the market's already up, say from here, about 16 handles. This is the prior balance area, intraday balance area. So if we're in here, I want to see whether or not price can be accepted in here. I would not look to place any trades in here unless there's a failure coming out of this zone, perhaps if the conditions are right to short. You never know. There could be a lot more stops in this market that can be elected, and that's the case. We will go higher. And so, coming out of this, depending on the elongation from today or the extension from today, it might be a situation to place a trade. But in here, if I'm long, I'm going to pay attention to what happens um, within this zone to see whether or not uh, the market just balances in this area. It would come as no secret from 37 quarter all the way down to 22 3 quarters. It comes as no secret if the market starts to balance within here because that was the last intraday balance before the market decided to break. Also, I want you to be aware. So if we're trading at 20, this is the daily bar chart. If we're trading at 20, we we're still chewing up in this elongated range. Anything more, you want to see us take out this high. This high represents a, I believe, a 2 week. This high, I believe, is a this would be a 2 week because this was a balance area from last week. So you're basically looking at taking out this 2 week high. If we can take this 2 week high and gain acceptance, we have another elongated day. So this is the 2 week high. We have this day that sold off on light volume. And so we could have some more action to the upside. I'm not saying that will happen today, but we will monitor during the week. Also, please be advised, since this is Monday and the market is proposing to gap higher today on Monday for the week. Oh, I'm sorry, this is the weekly. Apologize. The market is proposing, since this is Monday, to gap higher for the week. If the market can hold this gap for the week, then that shows that there's truly a new auction from a time frame longer than the day time frame. And that, again, if this gap can hold for this week, so we want to pay attention to see whether or not this gap gets filled. If it can hold for the week, more than likely the odds favor us trading higher and staying higher. If the gap is filled sometime during this week, it just basically says that the market wasn't as strong as price would lead you to believe. We just elect some stops and the selling pressure is back on because we cannot hold the gap for the beginning of the week. And that will play exactly into what is going on the longer time frame, that we're still one time framing lower, at least 1 month, for the month of August. So I hope that didn't confuse you. We will monitor this during the week to see what happens. I hope this analysis helps you as you begin to prepare to trade, not just today, but this week. Um, so with that said, this is Olawale Okabola with Spartacus Trading Corporation, wishing you a good day. Bring home those profits.